Can you finance RV parks with SBA financing? And the answer is yes, you can. RV parks, generally the SBA 7A is a fantastic loan for RV parks. They could do acquisition and the construction. So these loans can be based on cash flow. They can also be projection based for something like this. Hello and welcome back to another episode of the Investor Financing Podcast. This is the Q&A session today. So we're going to go through a series of questions that you have asked. And remember, you can go to investorfinancingpodcast.com/ask and ask your questions, and we will answer them live on the show. So without further ado, let's get started.
All right, this first one comes from Steve. It says, "Hey Beau, I'm looking at buying an RV park. I'm interested in SBA financing. The park currently has 30 pads and about another 5 acres that can be developed to add at least another 30 pads. Could I find financing for the acquisition of the property and for the addition of the extra 30 pads? Thanks."
Good question, Steve. So yes, you can. So the way you'd probably most likely want to structure this, this is potentially an SBA 7A financeable project. So they could do acquisition and the construction. Now, to get the construction, you'd have to have all your bids, your GC lined up, and be pretty much shovel ready to start doing the infrastructure to get the pads ready. Not pour the pads, you'll probably do a gravel pad, but depending if it's. But anyways, you can do that. So we would look at the existing tax returns from the seller. So he or she would provide 3 years of tax returns, a year-to-date interim statement. And then for you, we'd have a series of documents to get. One of them would be pro forma. We're going to do, 3 years of projections. The first year is broken out month by month, and then the second and third year. So these loans can be based on cash flow. They can also be projection based for something like this. And we could fund all the construction costs, any FF&E, potentially some working capitals, some employee salary if necessary. So you can bundle that all up with the acquisition. This is very common when you're buying like an existing RV pad that has never been updated, and there's a lot more potential. There's additional acreage. There's a lot of value add with it. So yes, we can do these. Feel free to book a call below, and thanks for the question, Steve.
All right, this one comes from Elisha. She says, "I am looking at purchasing an RV park in the Midwest close to a lake. The business is mom and pop owned and has not been managed well over the past few years as the owners are getting older. I don't think the cash flow right now would show well from a banker's perspective. There's a ton of upside. I am figuring that property needs about $300,000 in upgrades. The asking price is $1.175 million. What might be the best financing option?"
Okay, great. RV parks, generally the SBA 7A is a fantastic loan for RV parks, even if they need some value add. So it sounds like the in-place rents and the occupancy level is low, which might not debt service the new loan for the purchase, but that's okay because we can do a projection-based loan, meaning we can take a 2-year pro forma of what you're going to do, and you're going to add some more pads for RV. You're going to get some coin-operated laundry for income. We're going to take your pro forma. So you can use SBA 7A with pro forma. So even if it's a value add and a turnaround, like this has been obviously mismanaged, or maybe the owners now are getting older, need to pay attention to running the business, which we're seeing often. The 7A would work. We also have bridge financing, where that's really based on asset alone, and you go in and you fix the problem, raise occupancy, fix the property up, and then refinance into an SBA 7A or a conventional loan. So I would first look at the 7A because you're going to get the highest leverage, highest loan to cost. Can you finance RV parks with SBA financing? And the answer is yes, you can. You can even finance turnaround parks, meaning an RV park that is having some occupancy issues, is mismanaged. Maybe the debt service coverage ratio is a little bit lower than the normal 1.15 requirements. If you have a good plan, you definitely can get SBA 504 or 7A financing. The 7A sometimes is more advantageous because you can build in working capital, you can build in some of the salary requirements to get you off the ground and running after you take on ownership of the property. So you can do value add type of projects with the 7A. And you'd also want to use the 7A because it's got a shorter prepayment penalty on these turnaround properties, because typically you're buying it for $1 million, you're putting $400,000 into improvements, you're stabilizing, you're increasing occupancy levels, you're forcing appreciation on the RV park, and now the valuation, you're all in at $1.4 million on the project, and the stabilized value is $2.8 million. So after year 3, there's no prepayment penalty. You refinance using new stabilized value. It now appraises at, let's call it 2.5, 2.7. You can borrow 65 or 70% of that, depending on the DSCR at the moment. And there you go. You just did a almost a bridge loan with an SBA 7A financing. So, and the nice thing about the 7A is that they're okay with the smaller tertiary markets. I mean, bank by bank, all the banks have certain overlays, but most of the banks are pretty liberal because a portion of their loan is guaranteed by the SBA. So that's why you get the highest leverage you can using SBA financing versus conventional. You might be at 60% leverage versus on this transaction between 80 to 90% leverage on this business acquisition financing. So SBA 7A is an amazing tool for RV parks, along with sometimes the 504 is also an amazing tool, depending on the overall plan with the RV park. So hope that helps. If you have any questions on financing RV parks, book a call below. Thanks so much.
Meet Beau Eckstein, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.